Hello traders, you're welcome to this video and I welcome you back to the Forex Geek channel. Okay, so in this video we are going to be looking at the mass index indicator. All right, now the mass index indicator is a custom indicator, meaning that you would have to download the indicator from an external source, and after doing that, you will need to add the indicator to your indicators library. You would have to copy the indicators file and paste it in your indicators library for the MetaTrader platform. After you have done that, you will need to relaunch your MetaTrader terminal in case it was already open. After that, you can then add the indicator to your chart. Okay, so the mass index indicator looks like this. All right, this is the mass index indicator. This indicator was created by Donald Dorsey. Okay, it's quite a nice indicator for identifying potential trend reversals in the forex market. All right, now by analyzing the difference between high and low prices over a specific period, this indicator alerts traders to shifts in the market that signal a reversal might be imminent. Okay, so in forex trading, staying aligned with trends is essential. Okay, it's quite essential, but recognizing a trend reversal early can actually provide a strategic edge, and this indicator tries to help traders to identify trend reversals early. Okay, but mind you, no indicator is foolproof. This indicator is not an exception. It does not guarantee profit. It is not foolproof. Oh, right, take note of that. So when you want to identify a good trading opportunity using this indicator, all you have to watch out for are the oscillations of this indicator. Watch out for the movement of this indicator within this indicator window. Always wait for the indicator to get to the extreme price levels. All right, extreme levels rather. Before you enter a buy trade, wait for the mass index indicators to get to the extreme bottom level. Before you enter a sell trade, wait for the indicator to get to the extreme top level. All right, so and then always use this indicator in a trending market. All right, please use this in a trending market. If you're using this in a ranging market, you might get a lot of false signals. Okay, so stick with the trending market when using this indicator. Now we can see that this is a trending market. Let us just look for a good opportunity. As I said, make sure that you wait for the indicator to get to the extreme level before entering a trade. So here, the mass index indicator dropped to the extreme bottom level and it started pointing upwards. So this would have been a good place to enter a buy trade. All right, and then before you exit your buy, you can just wait for the mass index indicator to get towards the extreme top level and start pointing downwards before you exit your buy trade. Okay, then for a sell trade, make sure you identify a sell trend first. Identify a sell trend first. All right, make sure you identify a sell trend first. Okay, so in this case, okay, we actually had a double top here. A double top is a bearish reversal chart pattern. Okay, so this is a pattern that can show bearish reversal. So after we got this double top, the mass index indicator actually entered the extreme top level when the first top formed, right? So this wouldn't have been exactly the best place to enter a sell, because at this point we wouldn't have been sure of the direction of the trend yet, because this was still a bullish trend. This was still a bullish trend. Okay, so it's better to enter when a trend is confirmed. So in the case of this bullish trend, you can see this was a bullish trend. Let us just use this example. When you are not sure of the trend yet, stay away from the trade. Okay, so in this case, we had a bullish trend, and then you can see that the mass index indicator got to the extreme bottom level. This is another great example. So we would have considered entering a buy, and after buying, you can see that the price rallied all the way to this resistance zone. So we would have just waited for the mass index indicator to get to the extreme top level and start pointing downwards. So when it start pointing downwards, we can then exit our buy trade. So that's a great and very easy strategy. All right, it's a very easy strategy. First, identify the trend. That's the first step. Identify the trend. After identifying the trend, wait for the mass index indicator. If it is a buy trend, wait for the mass index indicator to drop to the extreme bottom level and start pointing upward before you enter a buy trade. If it's a sell trend, wait for the mass index indicator to rise to the extreme top level and start pointing downwards before you enter a sell. And then when you want to exit, just wait for the mass index indicator to get to the extreme of the opposite. So if it's a buy trade, let the mass index get to the top extreme and start pointing downwards before you exit your buy. If it's a sell trade, let the mass index indicator get to the extreme bottom and start pointing upwards before you exit your sell. So it's quite an easy strategy. All right. Now, when using this strategy, ensure that you observe proper risk management. All right. Make sure that you do not risk more than you can afford to lose, and also use good risk to reward ratios. For example, if you are risking $1 in a trade, you should be targeting $2 minimum as your profit target, your potential profit. All right, minimum of $2. Okay, that's what we call risk to reward ratio, 1 to 2. Okay, and then always confirm your signals, please. Always confirm your signals. Make sure that you confirm your signals before entering a trade. You can also use other indicators to confirm signals. For example, you can decide to use the moving average. Like here now, when we got a sell signal, okay, remember that I said you should always trade in the direction of the trend. So this is a sell trend here. This is a sell trend. So we got a sell signal here, and you can see around this point, because the mass index indicator was already in the extreme top, so we got a sell signal here. So we can see that at this point, at this particular point, the price had not yet dropped below the moving average. The moving average did not exactly confirm the sell here. This was where the sell was confirmed, around here. So this would have been a better place to sell instead of selling around here. You see, if we had sold here, we would have seen some drawdown, in as much as our stop loss would have been above here. So price wouldn't have hit our stop loss. If you had set your stop loss appropriately above the previous swing high, it wouldn't have gotten hit. Okay, but you would have seen some drawdown first before finally seeing some profit. So this would have been an ideal place to enter a sell after the moving average confirmed it. So it's very important to always confirm your signals. You can actually use any other indicator of your choice to confirm your signals. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell. Don't forget to hit the notification bell so you don't miss out on more trading videos like this. Okay, so in the meantime, thank you for watching, and I hope to see you in the next video.